AI just passed financial planning exams with scores that would embarrass many human advisors. And that's a problem, because it might soon know more about your money than you do. What if the smartest financial advisor you've ever had wasn't even human? And what if it's already managing billions, while you still pay a human 1% a year for advice that might actually be worse? In the next few minutes, you're going to understand why AI isn't just helping with your money. It's quietly becoming the most powerful financial mind you'll ever have access to, and why that shift might completely change who controls your future wealth. But stay with me, because this isn't just about robots replacing advisors. This is about control, power, and the hidden system shaping your financial future. Let's start with something most people never think about. For decades, financial advice was a closed world. If you didn't have connections, or at least a few $100,000, you simply didn't get access. The wealthy sat in offices with advisors who designed personalized strategies just for them. Everyone else, they got whatever product the bank was pushing that month. Then 2008 happened. Markets collapsed. Trillions disappeared. People who thought they were safe weren't. And out of that chaos, something unexpected was born. Robo-advisors. Companies like Betterment and Wealthfront launched simple systems that asked you a few questions, then built a diversified portfolio automatically. No meetings, no suits, no commissions. Just cold, efficient algorithms managing your money for a fraction of the cost. At first, people laughed. Can a machine really manage money? But the numbers started telling a different story. By the early 2020s, robo-advisors were already managing hundreds of billions of dollars. And the fees? A fraction of traditional advisors. But that was just phase one. Because what came next wasn't automation. It was intelligence. Imagine an advisor that never sleeps. It tracks global markets in real time. It understands inflation shifts before most analysts react. It studies your spending habits, your debt, your income patterns, even your lifestyle changes. Not quarterly, not monthly, but constantly. And it adjusts your financial plan in real time. That's not a future concept anymore. That's happening right now. But here's where things start to get uncomfortable. Recent benchmarks show advanced AI systems scoring around 98% on financial planning exams designed for certified professionals. Human advisors? Around 80%. Wait, what? A system that never went to university, never attended a finance conference, never worked on Wall Street, outperforming trained professionals in structured financial reasoning? And it doesn't stop there, because traditional advisors have a problem AI doesn't. Emotions. Fear during crashes, overconfidence during booms, and sometimes incentives that don't align with yours. Think about it. During market crashes, many human investors panic and sell at the worst possible time. But AI systems? They don't panic. They rebalance, systematically, emotionlessly. And that difference alone has already shown measurable results. Some studies during volatile periods like the COVID crash suggested robo-advisor users outperformed emotional retail investors by double-digit percentages. Not because the AI was smarter in a human sense, but because it never hesitated. But here's the part almost nobody talks about. This new generation of AI doesn't just manage numbers. It learns you deeply. It sees your income patterns, your spending habits, your emotional triggers in financial behavior. That moment you start overspending after stress. That period where you suddenly become conservative. That subscription you forgot about 6 months ago. It notices everything. And instead of judging you, it adapts your financial plan around you. Some platforms already connect to bank accounts, credit cards, investment portfolios, and debt systems to create a full psychological financial profile. And early data shows something surprising. When people get AI financial coaching, a large percentage actually follow through on advice. Why? Because it removes shame. It doesn't lecture you, it just shows you reality. But here's where things shift again. In 2024 and beyond, companies like SoFi and major financial institutions started integrating AI assistance into consumer finance tools, not just for investing, but for budgeting, debt reduction, savings optimization, financial behavior tracking. And users started interacting with them almost like personal coaches, always available, never tired, never annoyed, but always watching. And this creates a powerful psychological loop, because the more data AI has about you, the better it becomes at predicting you. And the better it predicts you, the more influence it has over your decisions.
Wait, what? Here's a real shift happening quietly. Experts predict that within a few years, AI-driven financial tools could become the primary source of financial guidance for the majority of retail investors. Not advisors, not banks, AI. But this isn't just a technological shift, it's a behavioral one. Because humans don't always make rational financial decisions. We lie to ourselves, we hide spending, we justify bad habits, we delay investing, we panic when markets drop. AI doesn't do any of that. But there's another side, a darker one, because AI systems are trained on historical data, and historical data contains bias. It reflects past market behavior, past human decisions, past financial mistakes, which means sometimes AI can inherit those mistakes or even amplify them. For example, if recent markets overvalued certain sectors, AI might overweight them in recommendations. If past data is missing rare financial crises, it might not fully prepare for them. In other words, it is powerful, but not perfect. At least that's what people thought. Because the newest wave of AI is changing again. It's becoming conversational, context-aware, even emotionally adaptive. It doesn't just say invest in this portfolio. It explains why. It simulates outcomes. It shows you different futures based on your decisions. One version of your life if you save more, another if you spend more, another if you invest aggressively, and suddenly, finance stops being abstract. It becomes personal, almost emotional. But here's the real twist. The future of financial success might not belong to AI alone, and not to humans alone either, but to a hybrid system, where humans define goals, values, and risk tolerance, and AI handles speed, optimization, and execution. Think about that. A human deciding what matters in life, and AI figuring out the best way to get there financially. That combination changes everything, because suddenly, access to high-level financial thinking is no longer reserved for the rich. A student with $500 could theoretically have access to the same intelligence layer as someone managing millions. The playing field begins to flatten, but that also creates a new gap, not between rich and poor, but between people who use these systems and people who ignore them. Because while one group is optimizing every dollar in real time, the other is still relying on outdated advice, gut feeling, and guesswork. And that gap grows silently, day by day, decision by decision. But here's the deeper question. If AI becomes your financial advisor, what does that say about trust, about responsibility, about control? Because we're not just handing over data anymore. We're handing over decisions, and those decisions shape families, retirement, generational wealth. But at the same time, for millions of people who were never included in traditional finance systems, this might be the first real access they've ever had to intelligent financial guidance. That's the paradox. Risk and opportunity, control and freedom, fear and empowerment, and both are real. But the shift is already happening. AI is not coming into finance. It is already inside it. Every bank, every investing platform, every budgeting app, it's already there, and it's improving every single day. So the real question isn't whether AI will change your financial life. It already is. The real question is, will you adapt fast enough to benefit from it? Or will you realize too late that the system has already moved on without you? Because in the future of money, the biggest difference won't be knowledge. It will be adaptation. And the window to adapt, it's closing faster than most people think. If this made you rethink how money, technology, and intelligence are merging, then pay attention to what comes next, because this is just the beginning of how AI will reshape wealth itself. And the people who understand it early will be the ones who benefit the most, not because they worked harder, but because they worked with intelligence that never sleeps.